My name is Mark Chalmers, and I'm President and CEO of Energy Fuels. And Energy Fuels is a unique company in the fact that we are building a critical mineral hub in the United States, and that hub will and currently recovers uranium, vanadium, and the rare earth oxides, and potentially radium-226 in due course. So unique investment, always good to be here and catch up with you, Mr. Gord.
Well, Mr. Chalmers, I'm ashamed I couldn't quite make it to your open day the other day. You had a lot of people from a lot of different walks of life up at site looking at the White Mesa Mill. So tell us a little bit about who turned up and what were the kind of big questions of the day.
Well, I mean, we had a couple hundred people. White Mesa is a hard place to get to. We had a lot of people from the local communities that are really interested in the progress we're making. But really, our biggest celebrity was Miss America. And Miss America was also at WNA, and she is a nuclear engineering student. She's, I think, got one class left, and also Miss America. So we flew her in to Blanding, and she gave a talk, and she is incredibly smart gal, and it was well received.
It was well received. She was also at WNA back in September in London. Great stuff. But in terms of, I guess, brokers and analysts, tech, I suspect, also politicians. I mean, give me a sense of who was there and what they wanted to find out.
Well, I mean, we had some brokers and analysts Sprott, BMO, Jefferies, Red Cloud, AC Wainwright were there. We're a little light on the politicians because they were in session at the time, and they also were kind of recovering from the pending government shutdown. It was again well attended. We had a number of indigenous people come to the open house. We really showcased, the construction activities that we have at the mill, and also the foundation that we put in place a couple of years ago, which is getting real significant momentum.
Right. Okay. And then let's talk about the kind of critical minerals hub components of this. Right. So you got two things going on here. You kind of got the uranium element and you got the rare earths component. So let's focus on uranium for now. It's on the up. Price $75. It's moving through the phases at the moment. People are super excited. Now, how does this play out? Do you look back to 2000, 8, 9, 10, 11 as a comparison, or does this feel like something new?
Well, I think it plays out that, you've got to get the fully loaded pricing that pays for a replacement pound. And that has to include capital. So I think that what I'm seeing is, the fact that it's hard to mine uranium, it's expensive to mine uranium, there's technical risks for mining uranium, and we need to get up to that new incentive price, which I believe is $80 a pound or north of that at the very least. And I think that a lot of projects need well more than $80 a pound to ever come up with an economic outcome. So, but what I'm seeing here is, I think in general terms, if you go back to that, say 2006, 7, 8 time period, the market is slightly better prepared than they were back then. But on the other hand, you have these years have gone by, and there's been a lot of high grading, and a lot of the good deposits are being mined out. Around the world, a lot of the deposits have been mined out or getting closer to being mined out. And then you've got this new focus on increasing demand and reducing carbon emissions, a number of different dynamics. So, but I think that the bottom line is that, the price is going up. It still needs to go up, and we need to get to an equilibrium where people are issuing contracts at that incentive price. I mean, the contracts haven't caught up to the spot price at this point.
Right. Okay. And what do you expect to happen? Because I've had a few conversations recently, and other industry commentators. We got Guy Keller at Tribeca, John St. Paglia at Sprott Physical Uranium Trust, Dustin Gower, who advises a few companies. They feel that as we're moving into a seller's market. It's been long time buyer's market. And if they are correct in that assumption of moving into a seller's market, it feels that some of the companies waiting for this incentive price, whatever theirs may be, are prepared maybe to wait just that little bit longer for an extra $5 here or an extra $10 here, if it is indeed a seller's market. How do you feel about the market at the moment?
Yeah, I think it is a seller's market, and it's certainly shifted. And I mean, even in our case, we're of the mind that, time is your friend, when it comes to uranium prices. And so, I think everybody is reluctant to sell uranium when the price is moving up this quickly because, again, you got to replace that pound. And that replacement pound has to come at a cost that is, at least incentive price or greater. So, look, it's always interesting dynamics in the uranium space. And, I see there's, certain amount of panic starting to happen, globally, and rightly deserved, because I think the reality is that, we're in this certainly a bull market. And at the same time, we've got to see people start producing to fill these contracts that have been signed over the last few years. And history repeats itself. And I always say this, that a number of newer projects, even older projects, are going to have a hard time delivering uranium that they're advertising.
Well, yeah, I think that's much talked about and certainly much debated, certainly in the conversations I've been having the last couple of weeks, which is that the numbers as advertised in the, I'm looking at the nuclear fuel report to my right here, may not be quite as they seem, in the sense that the pounds may not actually be there. Certainly the grays may not be there. And that's going to cause problems even if you do have the technical know-how, which not many teams do. So it'll be interesting to see how that plays out. Where does that put companies who can, in terms of the Cameco's we get? They are a producer, and obviously their quarterly was out today. That call was I think well received in terms of what it indicates for the market, and that in terms of that collar. I think people are feeling that we're sort of, as you say, moving up between that sort of $70 and $90 range. What do you need to do as a company to put yourself best position to take advantage of the scenario you've just described to us and the price point you've just described to us?
Well, I think you got to really know what your costs are, right? And you got to know what your production capability is in reality. You've got to know what your recoveries are. And that's harder on a new project. That's harder on new projects that are, got aggressive timelines to scale up at rapid rates. And look, it's hard on all projects, but, in our case, we've got projects that have produced for decades, and we know the cost, and, we know the technical risk and whatnot. So I think one of the, it becomes a bit of a leap of faith on some of these new projects that, very aggressive scale up and don't have necessarily all the technical factors fully defined. It's a bit of a crapshoot.
It's a bit of a crapshoot. Okay, but I think the damage that could do to the market is significant. I get the companies first time at it need to kind of get after the headlines, drive that share price up, and talk a good game with regards to being able to get into production within a reasonable time frame. But the damage to the industry, because given the size of the market is tiny and such few players in terms of those advanced development stories. I mean, does that concern you at all? Because it's going to impact people's ability further down the line to, one, kind of get contracts, maybe get access to that money, because people are going to sort of look to these failures. Ultimately, well, these what you're describing as failures.
Yeah, look, I think the proven players that have been doing this for lots of years will be fine, because they've got a good handle on all this stuff. But yeah, I mean, I think that some these contracts won't be fulfilled, and then there'll be a scramble of how do you fill them. And so my only advice I'd give to the utilities is recognize that there are risks here, and not all risks are equal when you start signing uranium contracts. I mean, everybody has a good story, and it sounds very convincing, but but the proof is in the pudding when it comes to actual delivery. And what I'm concerned with is, there will be these shortfalls, and how are they going to get covered?
Right. Okay. Well, I guess they analyze the opportunity for those who can, in that sense. We've had, again, lots of commentary about, what's important to be focused on. Japanese restart seems to be what Mr. Rule is looking forward to. Others are, looking at the situation in Niger and saying, obviously, that continues to be problematic. Others are, looking at Kazatomprom sending most of what they produce to the Far East. So where does that put the North American players? Where does that put the North American buyers in terms of that kind of where price moves and how quickly price moves?
Again, there's only so many producers out there, and I think that there is a greater appreciation, obviously, for production that's coming out of allied countries in and around the world. I don't really always see that reflected in the willingness to pay for that. Again, but there's at least an appreciation, and you're seeing a number of initiatives that are maturing, particularly in the United States government and House and Senate, in terms of supporting domestic production. Yeah, I think the reality, and I've talked about this a bit in the past. 5 years ago, when we did the Section 232, when you talk to utilities and stuff, they said, we don't care at all where that product's coming from. We don't care. As long as we get it, we're always going to get it. It's reliable and all that. And they're not saying that publicly anymore. And that's a big step in itself. I also think that the bipartisan support that you're seeing around the world, particularly in the United States, is very refreshing. And I think a number of these initiatives that are, coming through the U.S. government are actually going to happen this time with very, very strong support.
Yeah, I saw the White House putting his hands out for $2.2 billion in terms of on the enrichment last week. I assume that's going to be passed without too much controversy. Let's get back to you. So, I'm talking money. Let's go back to you. You have been bolstering your balance sheet over the past couple of years at moments in the market where you felt it was opportune to, because your share price was strong. You're sitting on how much money now, and what's the plan? What are you going to be doing with it? Is it still a wait and see in terms of where uranium goes, and what you need to be doing on the rare earth side? But how are you viewing the balance sheet?
Yeah, look, it's a combination of things, Matt. We'll announce our financials here in a few days, so I can't get too far into that at this stage. But again, last reporting period we had $135 million of working capital. Now that's defined per GAAP. But when you look at things like the note we have on Encore, the shares we hold, and what's soon to be ISO Energy, and our inventory values and stuff, it's well north of $200 million. And part of the reason we've got such a strong balance sheet is we're preparing ourselves for execution of our strategy, but also we're also looking at a number of M&A targets that make sense for us, both in the uranium space and the rare earth space. And having a strong balance sheet and the cash gives us more strength on how we progress there.
I think there's a lot of people hurting out there, and not necessarily because they're bad assets, but because they're cash constrained and they're not able to do anything with the good assets that they've got. So it's a buyer's market from in that sense here, rather than seller's market as it was in nuclear. But just want to finish before we kind of jump into the rare earths bit with the uranium components. Obviously, you've got lots of multiple assets here. Is it just a pure waiting game on that one until you kind of get that kind of price discovery which works for you? And if so, do you have a sense of the kind of time frame there, or because the cash balance you think actually we can sweat this one out?
Well, we we're going back into production at the Pinyon Plain mine and at the LaSalle complex, which is a number of mines that are connected. So probably 3-4 mines, and we signed these original contracts about a year and a half ago, and if you looked at it from a what our production capacity is between all those projects, it's probably 30%, 40% of those projects. So we're actually getting mines ready and operable without that production being contracted, because we're confident that these prices will continue, and there will be opportunities to sign contracts when we're ready. So one of the problems is you can't always wait for that perfect moment, and momentum is important. Getting the people in place, getting the procedures in place. You can't wait, and we're not waiting. And again, because we have the balance sheet that we have, we're able to execute right now, and we're not afraid to go into production with these various assets in sort of a staged approach.
Okay, that's interesting. And then, so coming back to your point around M&A in terms of it's a buyer's market from that sense. With well, obviously you got to want the asset, you got to feel that it can actually get into production at some point. But uranium will, I guess, let us know when you've identified something that you like. I'm kind of intrigued on the rare earth side, because if I look at the heavies at the moment, heavy sands at the moment, it's pretty tough out there. Prices are down, kind of across the board. There must be some buying opportunities for you, because I think in terms of getting that balance between future inventory levels or access to supply levels for the future, that's got to be high on the agenda, high on your mind in terms of what you need to maybe take advantage of right now. Is it?
Yeah. Well, again, uranium seems to actually it's shifted, because a year or two ago, the rare earths seemed to be ahead of the uranium, in terms of investor interest, and the prices were high for the rare earths. Uranium was low, and now uranium's gone high, and rare earths has come back materially from where it was a couple of years ago. So again, because we're diversified between these two sectors, it gives we're able to buffer that quite effectively. And we see that uranium assets have certainly gone up in value, but at the same time, with reductions in values of the rare earths, and in some cases the heavy mineral sands, that creates a better buying opportunity for us with our strength, with our balance sheet, and our strong share price. So it varies a bit, but it again, I think, supports the strategy we have, which is diversification across these critical minerals, and allowing us to capitalize in the swings that happen in the course of a year or two or three.
Right. Okay. So I guess you can't say much. You say you've got announcements coming up soon, so maybe we'll certainly wait to see what you kind of come to market with on that front. So Mark, appreciate time today. Feels good. Feels a little bit exciting on the uranium front, because that kind of tension feels genuine. And I'd say that I think people's expectation around price is that it will keep moving, because as you've articulated, the supply side is feeling a little bit wobbly in some places. So we shall see what happens.
Well, Matt, again, it's always interesting. I mean, I've been doing this for a few years, but again, I think. If you believe in the energy transition, you believe in the need to decarbonize and electrification, improvements in electrification, we're a unique spot. And again, we're not trying to be all things to all people, but, our business plan is unique, and we're very proud of that business plan. And we've just got to continue to execute and show the market that it's going to be world material and how we execute. So big plans. We're moving, we're running hard, but we still got a lot of work to do.